Good evening, students. Welcome to the live learning classes organized by Board of Studies ICAI. Today is a special day. Results have been announced for November 2023 attempt, right? So, for the students who have cleared their final, congratulations and all the best for your brighter career as a chartered accountant. And students who have not been able to clear for whatever be the reasons you are aware of. I would say don't lose your heart, give your best attempt and try for best to be attempted in your May 2024 attempt. One advice, don't lose your heart, just try to understand where you have been lagging, where you felt you have done really well, but marks didn't came the way you have expected. Probably factors of overconfidence, probably little bit of extra attention required, or any other reason you need to examine yourself, right? And this examination is one examination which always tests your patience until and unless you are perfect in your preparation. It will not let you go unlike your regular graduation examination, right? So you get your merit because you're a chartered accountant, and this degree deserves to be with a merit of performance. It should be awarded. So don't lose your heart. Give your best shot in May 2024 attempt. And before we start with, let me have confirmation. Hope you are able to hear. Yes, ma. Today is a purple day. Yeah. Good evening, Namrata. Good evening, Shailesh, Mansa, and Harshit. Yeah, you're able to hear and you're also able to see my screen now. I was reading one comment given by Harshit Kumar. So I'll just read for the sake of other students also. Please once explain eligibility for status folder in Excel sheet. In my application, I have given different turnover details. That's why Ari has rejected the application. Okay. Eligibility and completion part, let's stick on to that one. I'll not go in depth I was about to give this clarification. Foreign trade policy, DGFT provisions. This is the first time many of the students would have been heard about foreign trade policy. Like for a moment, status holder certificate. I don't think everyone, Rashid, knows what is a status holder certificate, how this is awarded, how the export turnover is computed. In simple aspect, Rashid, they have seen export turnover. So my actual physical exports, my deemed exports, and also supplies to SEZ. Supplies to SEZ alone, be careful, Rashid. Money should have been released in foreign currency. Supplies to SEZ unit, foreign currency. Supplies to SEZ developer can be in INR. So when you talk about SEZ supplies, it should be in foreign currency in case of SEZ unit. In case of SEZ developer, it should have been in INR. That is permissible. And money earned in foreign currency is for actual exports, and money earned in INR, that is on FOR basis, for your deemed exports. That would be the total turnover which is relevant for us to calculate this status holder certificate. So I'll not go much more detailed technicalities because we are all at the beginning stage. If this would have been little more advanced session, I would have deep dived into this with various practical examples. So what I'll do, I have duty-free import authorization, advance authorization, EPCG, and couple of other schemes. I'll finish off those and we will come back to this understanding of status holder hardship. Hope that is fine with you. Okay? Good evening, Edkondalo. and good evening, restaurant. Let's start with our today's discussion. And I'm going in detail to make you understand this foreign trade policy provisions so that once you understand, you can remember better for your examination. We are in Jan 2024, exams are due in May 2024. So another 3 months, you need to carry these provisions. So my attempt, my wholehearted attempt would be to make you understand these aspects in a better fashion with a conceptual background, and also a couple of examples I'll be giving here and there, which would be helpful for you to be prepared for your examination. And there are few technical jargons which are used. Please, all of you, open your institute material, module number 8, and we have covered first 15 pages in the previous session. I'm going to cover the balance topics in today's discussion. There are few important topics: duty-free remission and duty-free imports. These are the 3 important topics which are there for your examination point of view. So make a running notes as I explain these provisions. And examination, when you think for MCQ question, there are aspects like say STA, State Trading Enterprise. Examination, expect at least one MCQ from these abbreviations from the background, like what they would be testing you in MCQ, abbreviation, along with this purpose and application. These would be the aspects which would be relevant for testing. Like one example. There's one term called TEE, which we have discussed in our last session. This particular term, TEE, is explained in relation to development of towns which have a potential for export excellence. Towns having export excellence. Examination. The term TEE referred in foreign trade policy stands for trade economic excellence, town export excellence, travel export endeavor. Now they'll give you 3-4 options and they'll say the purpose of TEE is to encourage the small districts and towns where there is a potential for export. So they would be testing you this terminology along with the background with which they have explained the provisions. So here, important aspect is when I explain the concept, wherever you come across these shortcuts, this kind of terminology, make a running notes and just write STE, State Trade Enterprise. Purpose, State Trading Enterprise. Purpose, government or notified agencies for the purpose of import and export. So each and every terminology has got a peculiarity. Wherever you don't understand, let me know. I'll clarify those terminology. Moving further. Today's class, I'm going to explain you the general aspects covered in relation to import and export. Now, you remember this basic discussion PRR, goods which are prohibited, which are restricted, which are regulated. Prohibited, restricted, regulated. Similarly, prohibition or restriction on import or export can be imposed by DGFT through a notification. Now, when goods are dealt, as a businessman, you are expected to examine the provisions of customs law, examine the provisions of DGFT regulations, examine the provisions of GST law for the purpose of payment of duties and taxes. This will help you to examine the benefits, the restrictions, and alternative available. When I say alternatives available, like example, one of the example about alternative available, payment of duty. I can defer my customs duty payment. I can defer my customs duty payment on fortnight basis. On fortnight basis, as per the customs law. If you are a status holder, if you are having a AEO certification, there is a AEO status. This AEO status is awarded by customs, right? So this particular AEO status, which is awarded under customs law, based on a particular categorization, you will get a mechanism to make the payment once in 15 days. So here, you as a businessman, you are expected to read these aspects, examine the provisions for the purpose of this notifications issued under DGFT. So where do I find these notifications? www.dgft.gov.in. On like we have GST website. This particular website is going to regularize and give the specific restrictions imposed under import and export. And these aspects always are in the public interest. Always in the public interest. So relevance of this public interest, what we can do is we can, as a trade body, representation can be given. Representation can be given. Like to give an example, let's take example of coir. Coir products. There is a place called Trichy in Tamil Nadu, and there's a place called Palakkad in Kerala. Now, these are the places where there is an abundant source of it's coir, not coil, it is coir, COIR. Coir products, which is your extract of coconut meat items. So there are manufacturers in Trichy and Palakkad, where they wanted a absolute exemption from IEC provisions. What is the advantage of this particular IEC? This particular group of trade association, they say that, so we are all in agricultural activity. We don't have any IEC. What we can have PAN. Probably using PAN, please enable us to make a declaration, fill a simple form, and let the export consignments be dealt with. So wherever there is a public interest, the notifications are generally issued to take care of the trade body's requirement. And an authorization is required. When I say authorization, this authorization refers to license. This refers to license. Earlier, we used to call under EXIM policy. Under erstwhile EXIM policy, we used to call license. Under foreign trade policy, we are using a term called authorization. Authorization is required for export or import. If there is a restriction, and the import authorization are for actual user only, unless the condition is specifically dispensed with the DGFT. Now, there is a reference called actual user only. Restriction with actual user. These aspects which I am going in detail, these are the topics which are relevant when we travel to advanced authorization, when we travel to duty-free import authorization. That's why I'm giving little more clarity on these aspects. Now, there is a restriction, say, on import. There's a restriction on import with a condition that actual user condition. Let's take an example that there is a drug related some chemical compound which has to be imported. This particular chemical compound has a multiple usage. That means to say, if this particular chemical compound is not regulated, it may lead to maybe impact on the health of the civilians. In the sense, if at all this particular chemical compound is mixed with alcohol, it may cause to, when there is a dilution of alcohol, it may also cause ill health of a human being. Or if this chemical compound is used in explosives, it may lead to loss of vision of the civilians. So where the DGFT comes to know based on your SCOMET criteria, and also other trade measures, they may say actual user condition. That means to say, so and so particular registered person alone is empowered for import of those compounds used in the production process and later to export them. Couple of movies you would have watched this. Assuming that there is a particular bomb explosion, when there is an investigation being done, they will do a particular research. Assuming that there is a factory where there are a couple of chemicals where this explosion took place. What they will do, who is the manufacturer, what is the products they are dealing with, what is the license they have been given with, in the last 1 month, what all activities, what all goods they have imported. Now, these are the various aspects which are there in the regulation of a authority, which is called regulating authority. Under foreign trade policy, I have my DGFT who regulates these aspects through a person called RA. We call this as regional authority. Regional authority. Every particular state, we have a regional authority who have a subdivisions who issues these particular notifications. So here when we say actual user condition, only those users who have been notified, they should be permitted to import and permitted to be exported. No one else can do that particular activity. This is the relevance of my actual user condition. Authorization can be applied for on the portal of dgft.in by using applicant's IEC number. So what if I don't have IEC number by virtue of any specific provision thereof? Using my PAN or any other number provided, I can get this particular goods declared. Moving further, this particular provision may be on the basis of ban on the basis of a country, ban on the basis of a particular organization or a particular group or particular individuals, etc. There's one reference I have given earlier called DEL. This DEL stands for, I don't know, this is covered here. No, it's not. I'll explain this. There's a reference called denied entry list, where a group of products or group of persons notified from import or export. Import or export. This is done usually by way of a notification. Further, product specific provisions are also imposed. Now, goods which are imported in general, they say they have to be compliant with domestic laws. They have to be compliant with domestic laws. Now, for a moment, let us talk about electronic goods. Electronic goods. For your kind information, electronic goods are restricted as on today. Why restricted? Because of dumping. Because of dumping, or because of your carbon, I would say because of the silicon dust which is being accumulated. There could be a scenario where used old exchange laptops, computers, electronic hardware devices or connecting devices, anything which is coming into India, which is not having a proper shelf life, it is as good as the scrap is being coming to India, which is going to be a junk. So not to have that scenario, as of today, these electronic goods are restricted, where there is a regulation for country of origin, then test of test certificate for the life available. So here, any goods which have been imported, assuming for a moment, I have imported a laptop where this certificate is not available. The customs authorities will say, look, there is a regulation from Department of Commerce and Industry, which is in turn monitored by Department of Revenue, saying that these electronic goods which are not in compliance with domestic laws, we don't permit for clearance. Why? Because the goods are coming into India, they have to be compliant with my domestic laws. In addition, DGFT may prescribe procedures by way of a public notice to be followed by importer or exporter. Now, public notice is generally as good as a notification. This is as good as my notification for various procedural aspects. Moving further, ITC, Indian Trade Classification, which is your HSN. Now, my goods are either free, restricted, prohibited, which are traded through state trading enterprises. Now, there is a list which is provided, which can be list of goods, which can be either imported or exported only through state trading enterprise. So here they say that my import and export policy for all goods are indicated against each item, which is against HSN. Now, this purpose of restricting through STE is for the purpose of regulation. As of today, if you ask, so what items you can think of? One is your pulses. Then you had this pepper, agriculture produce. These are a couple of examples where goods are permitted to be imported or exported only through state trading enterprises. Now, why? Because the government wanted to have a regulation. There should not be a dumping. There should not be an unregulated price. There should not be any unregulated pricing. So for that purpose, there is an empowerment given through state trading enterprises. As per your customs law, section 14, when we read, we have schedule 1, which deals with import of goods, schedule 2, which deals with your export goods. Now, importance of state trading enterprise. Imports and exports. This ITC, which is given as per foreign trade policy, is going to specify certain goods that they can be imported, exported only through state trading enterprises notified by DGFT. For a moment, say I wanted to import, say, a sunflower oil. This is regulated. Okay. Because they are regulating sunflower oil, I may import sunflower seeds. Now, sunflower seeds is a source for converting or extraction of sunflower oil. So here, any product connected with this based on your HSN, that is your import tariff classification, these items are permitted only to import or export through this entity called state trading enterprise. These are either government or non-governmental enterprises. Government, where there is a body, or they may, depending on the trade requirement, they may also have non-government enterprises. Like example, if you ask example, corollary example for STE, you look at this ration depot. The ration depot where the people who are below poverty line, there are various schemes of Government of India where rice, wheat, your oil, your pulses. These items are distributed to the people below poverty line. So this can be done through government regulated ration depot or a private agency with the specified regulations. They have notified for distribution of certain commodities. Something like that is the trade importance of state trading enterprises. So this could be a government or non-governmental enterprises, which includes marketing boards, which deal with goods for export and also import. Now, examples for STE, Food Corporation of India, FCI, ONGC, National Fertilizers Limited, IREL, NDDB. Now, these are a couple of examples which are empowered by the government to be called as state trading enterprises. Now, one classic example of your FCI, Food Corporation of India. FCI is a larger body. FCI is a larger body which regulates your rice being distributed and storage in India. So any rice which is being exported out of India, this is regulated through FCI. So there are a point in time where the government of India comes with a notification. Like for a moment, take example of onion or wheat. There are situations and circumstances where maybe due to natural calamity, continuously there were floods. Whenever there is a flood, your crop is damaged. So due to floods, my crops which are damaged, I should have sufficient food for the domestic people. So not to get this, basic essential foods out of India, these items are regulated through this state trading enterprises. Purpose of STE. IEC, I'll skip this. Everyone is aware of this. Your mandated documents for import and export. First, we'll look at import. When I make an import, the following documents are relevant. One is bill of lading, airway bill, lorry receipt, railway receipt, postal receipt. These are outbound consignments. These are domestic documents like railway receipt, lorry receipt, postal receipt. Now, these are the documents where there is a movement of goods in India. In the sense, SEZ to DTA. It happens through, say, LR, through RL. Bill of lading, airway bill from the country of origin. This is a document through which the consignment is coming to India. Along with that, commercial invoice, packing list, or separate invoice and packing list. Now, these are the documents which are given by the seller. Seller gives something called commercial invoice. This commercial invoice is similar to my tax invoice. Under GST law, we have studied something called tax invoice under section 31. All the details, whatever is there in section 31, read with rule 46. The details of same are embedded into my commercial invoice. So what else you have in commercial invoice? I have country of origin. I have foreign currency. I have conversion rate. I also have details of the consignment under which if there is any license or I would say authorization details. Now, all this is a relevant data which I have to put into my import document. Like example, sir, I'm importing a particular machinery, plant and machinery using what I can say, a particular EPCG license. This particular authorization is something I'll code in my bill of entry. So while quoting this particular bill of entry on the basis of country of origin, like example, I gave one reference called preferential rate of duty. Similarly, there are few countries from where the goods are meant for export. So all this information of the country from where these goods are being originated, etc., will be additional details which are printed on my commercial invoice. Country of origin, details of foreign currency, then any restriction or ban on this particular goods. If there is a preferential trade agreement between two nations, even those details also will be mentioned. This is the relevance of my commercial invoice. In case of exports, as an exporter, when I take the goods into the customs authority or for DTA to SSL or DTA to domestic tariff area, I will be making a reference to bill of lading, airway bill, lorry receipt, railway receipt, postal receipt. Now, these are the basic documents issued for export purpose. Commercial invoice, like we prepare tax invoice. Similarly, commercial invoice is prepared, including packing list. Now, this is an extra document which would be prepared. What is the purpose of packing list? This is going to indicate my quantity and description. This is relevant for self-declaration. This is relevant for self-declaration. So why is it relevant? You remember this status holder certificate? As a status holder, I can make a self-certification. I can take my consignment directly to the ICD. From ICD, the goods can be exported with a simple documentation. So this packing list is going to be a relevant document which can be fed into my ICAI portal. Along with that, the permission is given by virtue of filing a shipping bill or bill of export. Postal bill of export. So shipping bill is a document filed for exporting the consignment. Import, in addition to these two, I would be filing internally a document called bill of entry. So these are the basic documents which would be using for import or export. By and large, you would be seeing this commercial invoice cum packing list in case of imports and exports. When you do audit next time, please focus on this invoice cum packing list, commercial invoice cum packing list. And reference to this commercial invoice packing list always will have a reference to authorization. Reference to authorization details. In the sense, if I have export obligation, the export obligation will be fed into ICAI portal, which in turn are flowing to my DGFT portal. Why? When I take a benefit from the DGFT authorities, example, what benefit you have taken? I have taken a EPCG license. As per EPCG license, say I have enjoyed duty exemption for rupees 5 lakh. Duty exemption for 5 lakh. What happens here? 5 into say 6, 30 lakh worth exports I have to do. So what happens when I file my shipping bill? On the basis of shipping bill, on the basis of this declaration on a commercial invoice for this authorization, which is nothing but your license, the data is flowing from customs portal, which is called ICAI portal, to the DGFT portal. Parallelly, the data which is coming to ICAI portal is validated from GST portal using your GSTR1. In my GSTR1, I would be saying that this is my tax invoice, corresponding is my shipping bill, corresponding is a port code, corresponding is a date. All the data which I fed into GSTR1 comes and validates in ICAI portal. And once the shipping bill is filed, the same element of duty comes to my DGFT portal. So what happens in the DGFT portal? The concerned RA, he will log in with a particular IEC number. If the value of exports meets the criteria called 30 lakhs, then this particular RA gives something called EODC, Export Obligation Discharge Certificate. Don't worry with the terminology. I'll come in later part of time, my material. Export Obligation Discharge Certificate. So here, the customs authorities are monitoring your activity using these documents, and then they are going to give a license, validating the license, exports happen, then giving a certificate called EODC. Let me see any doubts before we travel further. Open-ended policy. Mansa is asking, sir, what do you mean by open-ended policy? Open-ended policy, it refers to certain decisions where there is no sunset clause sort of thing. Like example, say goods imported into India under EPCG, which is covered under deemed exports, are exempted from levy of IGST in compensation 6, compensation cess under section 3, subsection 9, subsection 7 of Customs Act, Customs Tariff Act. Now, this IGST and cess, whatever I'm going to pay, these are the elements which have been exempted. So why is it exempted? Because of a particular scheme which has been there under foreign trade policy. Similarly, say let's take example of safeguard duty. World Customs Organization have said that none of the members of WCO should impose safeguard duty in relation to a particular commodity. Now that's an open-ended policy where I have a policy which is integrated with any other bigger organization policy. I have a linear integration of these two aspects. Hope this is clear, Mansa. Shakti is asking this question. Are electronic goods also restricted? What constitute obsolete goods? Electronic goods are under restricted category. It's not prohibited. It is not free. It is under restricted category. In the sense, I have to file a declaration. I have to take a permission and then import the goods. Now, when I say obsolete goods are the goods which are not fit for usage. Like example, now interesting point. This obsolete goods is connected with this topic called valuation restrictions under customs law, where there's a restriction of capital goods which are not brand new. If there is a capital goods which are used, imported, I need to have a chartered engineer certificate. Only if the chartered engineer certificates that 80% of the life of that particular machinery is remaining, then there will be a permission from the customs authorities. So obsolete goods which are not fit for usage on the basis of the domestic laws. Hope this is clear, Shakti. Then Mansa is asking this question. So we read baggage rules as per notification. One laptop is imported in India above age 18. Is exempted from exempt from duty. Is this notification still relevant? Because as you say, import electronic goods. Acha, Mansa, what I'm trying to say here is, there are goods where there is a restriction. In the sense, I'm not allowed to import freely. When I say restriction, I have to take a prior approval. I have to take a permission. Now, restriction is there under DGFT for electronic goods. A good question. Let me explain in detailed manner. Very good question, Mansa. I'll explain this. Let me just take a blank slide. Now, please understand these aspects. Personal, commercial. My commercial, which is business point of view, are regulated under foreign trade policy. Foreign trade policy, as the name goes, all the regulations what we are studying under foreign trade policy is in relation to business class. On the other hand, personal goods. Personal goods are regulated under baggage rules, baggage provisions. Personal goods are regulated under baggage provisions. This is no way connected with foreign trade policy. Are we clear with the basic understanding? Mansa, very good that you brought this point for the benefit of other students. Let us understand this background. My foreign trade policy is a policy in relation to trade measures. When I say trade, buying and selling, import, manufacture, export, import, process, export, import, use for provision of service, then render your service which is exported. All these are for commercial aspects. Foreign trade policies, when you talk about your PRR, prohibited, restricted, regulated. Now, this PRR is in relation to your trade concern. No way connected with my personal aspects. So, personal aspects, baggage. I have a laptop which is permissible for age of a passenger more than 18 years. Now, this particular laptop which is there, I would bring without payment of duty. Without duty. Now, this is how I understand my baggage provisions, and no way my foreign trade policies coming in between your baggage aspects. Now, one question which Shakti is asked and connected with your Mansa's question. When I talk about my foreign trade policy, when I talk about regulation, this is going to, regulation is for testing the purpose. Why these goods are to be brought into India. Now, when this being brought into India, testing the purpose, now they wanted to evaluate and regulate. Evaluate and regulate. Especially when I was talking about electronic goods, I was talking about electronic goods. Why they are restricting on electronic goods? For the reason there is a Make in India policy, Make in India. To leverage and to encourage my domestic players, they have brought these electronic goods into this regulation mode. So all electronic goods are under regulation mode. Now, you remember I showed one picture before the beginning of the class. Yeah, this was one picture I picked up from my this DGFT portal. When you visit to Ministry of Commerce and Industry, they have put this particular banner. Read this particular banner. The I in iPhone 11 now stands for India Made. So all integrated circuits are being manufactured in India for your motor vehicles and other aspects. So for this purpose, they are regulating my business. So this is how I understand the regulation and the foreign trade policy, which is no way connected with my baggage aspects. Hope this is clear, Mansa. Let me see other doubts. Next. Mansa is asking this question. State trading enterprises, sort of PP, public-private partnership. Yes, Mansa. More or less, everything cannot be done by government. So at times, depending on your industry requirement, I have to operate on a PPE model, right? So ST is something of that sort. Namrata is asking this question. Seller have to issue a tax invoice and commercial invoice at the same time. Yes, Namrata. For the purpose of GST law, tax invoice. For the purpose of customs law, commercial invoice. There is a intermediary called CHA, clearing house agent. Generally, when the business people export the goods out of India, they appoint an agent called CHA. We call them as broking agents, commission agents, brokers, whatever name you call. These are the agents who have been appointed for the purpose of exports. And these people, as a checklist, they'll say, Sir, commercial invoice de dijiyega. I have given tax invoice. फिर भी the CHA by default will ask, Sir, बिना commercial invoice, customs officer में आपका consignment clear नहीं करेंगे. तो they should have this heading called commercial invoice. So if I am given with tax invoice, he may say, सर उनको समझ में नहीं आता है क्योंकि कस्टम्स लॉ के मुताबिक कमर्शियल इनवॉइस देना ही पड़ेगा. So this is how I use, as a exchangeable document, tax invoice and also commercial invoice. And packing list has got only quantitative and descriptive information. Hope this is clear, Namrata. Please refer that running notes in case of export documents. Yes, ma'am. You're right, ma'am. Harshit says for advance authorization, DFA, application made by DGFT or any other portal or offline jurisdiction office. It's all online, Harshit. Nowadays, everything is digitized. Gone are those days where we go manually to the RA and we take, it's all online. Using my IEC, I have class 3 digital signature I will be using for logging into the customs portal. Very, very highly secured login. Unlike your GST or income tax, I need to have a digital signature to log into my DGFT portal. That's the level of security they have. Then Harshit says, so we get the import data from ICAI or DGFT, like bill of entry number, invoice. Good question. I'll explain this once again. Hope this is clear, Mansa. Most of you have this doubt. I'll clarify what Harshit is asking. GST, customs, then DGFT. This both are under the Ministry of Department of Revenue. This is under the Ministry of Industries and Commerce. Department of Industries and Commerce. I would say Department of Industry and Commerce. I have a common portal called GSTN. I have a common portal called ICAI. I have a common portal called DGFT, which is also called DGFT. dgft.gov.in, ICAI.gov.in, GSTN, GST.gov.in. So here, my sales data, which have bill of entry, port code, document, bill of entry date, this information will be on the basis of bill of entry, which is filed on a customs portal called ICAI. So once I file my bill of entry on the ICAI portal, this information I again feed into my GSTR1 under table 6A for the purpose of mentioning my zero rated supply. Right? So this information which I am going to feed here, which may also include your SAZ supplies. I think 4A is going to be SAZ supplies. So here, this data which I am going to feed in relation to actual exports, there is a validation which happens. This validation is for the purpose of benefits under GST, under section 16 of IGST Act, read with section 54 of CGST Act. Under 16 of IGST Act, 54 of CGST Act. What do I say? Zero rated supply, I don't charge GST. I export goods and services. Similarly, I want to claim a refund accumulated input tax credit. So my refund and this aspects in relation to goods are validated on GST portal and customs portal, where there is an integration between these two portals. Integration. Please keep in mind, e-invoice, e-way bill are only a extra add-ons under GST law, which are of no relevance, This is just a compliance point of view, nothing to do with these aspects. So yeah, this is a validation for my refund and for exports. Similarly, my data from IceGate portal travels to the DGFT with a link called IEC. Here the data is happening through a link called GSTN. Now please look at this. My GST has got a reference to GST number. Customs has got a IEC along with GST number. So here, this portal throws the data to DGFT portal using IEC. For what? Reference to authorization. That means to say, when I file my bill of entry, I make a declaration. What are the declarations? Like example, do you want to claim benefit of duty drawback? I will say yes or no. Do you have what I can say, any export obligation for this consignment? If you say yes, you can say no. If you say yes, you will give a reference to the license number. So based on this data, like under DGFT portal, what they have in DGFT portal, there's a track of a IEC where there is a list of authorizations. Against each list of authorization, value of export obligation, value exported, balance, then redemption. Now, this is a data which is available electronically with the DGFT officer. They will say on the basis of IEC, sir, I have 3 licenses, 1, 2, 3. Against this particular license, what is the value of exported? Like assuming for this license, 40 lakhs is a value I have taken a benefit. As per customs law, I have to export goods worth 40 lakh. Then balance will be nil. And once the export obligation is done, there is a condition called repatriation. Repatriation of foreign currency. If there is a condition of repatriation, if that is also met, redemption will be done and date of redemption will be marked. So now this is a history which is created for me, like your income tax. In income tax portal, I have a specific assessment year. For that assessment year, the demand which is created, the demand which is admitted, the demand which is disputed, the demand which is settled by way of appeal, order, anything. Then finally the balance due, then final order. So the way you have on income tax portal, similarly everything is maintained on DGFT portal using my IEC data. Now, at this point in time, I'm giving you the background, how the data is connected, how value addition and knowledge is getting transferred among these 3 portals. Hope this is clear and this is interesting, how the data is being worked upon. I think a couple of other questions are there. Sir, like GST on purchases getting into A to B, same kind I'm asking for import or purchase because we have received a notice to present the data for some period. That's why I'm asking the okay. Yes, ma'am. There is a data available from IceGate portal traveling to DGFT, where any goods where they feel it should have come from STE, but it has gone other than through STE. Any benefit of doubt, they may call for that data. Right? Next. Namrata, last class, you were actually asking about this DEL. I said we are going to have detailed discussion. So that is being discussed here now. Now, under DGFT provisions, there is a penal action placed of an entity which is in DEL, like your DND, do not disturb in my telephone, Ministry of Telephone, not telephone. What is that ministry? Ministry of Telecom Affairs. Like we have in Ministry of Telecom Affairs, I have a denied entry list. What is this denied entry list? There is a penal action where there are situations and circumstances in which a person shall be liable to penal action under Foreign Trade Development and Regulation Act, where on account of authorization holder. When I say authorization, this is nothing but a license. Violates any condition of such authorization. Violation. What is a violation? There is a condition given. Condition says that you have to import the goods within 90 days, and meet with your export obligation within 180 days. But this fellow gone beyond 365 days, nothing has been done. This is called violation of a condition. Or this is one example. Second example. Let me give another example. Transfer of goods prior to export obligation. Now, I have imported a particular machinery with payment of customs duty, and I am supposed to keep the goods till I meet the export obligation. So, what do you mean by export obligation? Like customs, foreign trade policy says, I'll give a clarity here for this export obligation. Let me just come to my presentation. Export obligation. Under foreign trade policy, there is a permission for import of goods. What will I do with this import of goods? I may use in manufacture. I may use in assembly. I may use for provision of service. Now, what you will do with this? All these aspects, all these activities are meant for export to perform the desired level. In the sense, goods imported, say for 100 kgs. I imported good for 100 kg. This I have used in a process. Using my Sion, there is a standard input output now. For 100 kgs, there should be an output of 80 kgs. There should be output of 80 kgs. What will I do with this output? This I have to export. Now this is called export obligation. So my export obligation is one to one or one to multiple. In the sense, when I say one to one, import equivalent quantity based on Sion, explore such particular quantity. This is in relation to inputs. In relation to export, in relation to capital goods, use this particular capital goods to process and export that particular capital goods, or use this capital goods for provision of service and export value based. Now, in these two cases, I'll call 1 to 1. 1 to 1. I received some inputs based on CN. I have consumed equivalent quantity exported. I received capital goods, I processed, and such capital goods again exported back. I received capital goods. Now these two are called one-on-one. This is called 1 to multiple. In the sense, I procured a capital goods. Assuming I saved customs duty for rupees 30 lakhs. Assuming 6 times, I have to export for services where my duty value will be rupees 180 lakhs. 180 lakhs. That means to say, my export obligation is fixed. My export obligation is designed on the basis of either standard input output norms or on the basis of value of exports. This is called EO, export obligation, right? Now, when I come to my DEL, I have violated any of the authorization norms. Could be violated the basic conditions. If I read the terms and conditions, any of those conditions are violated. Fails to fulfill export obligation. When I say export obligation, I have purchased goods which should have been used for exports, but I failed to export. Now, this if you read as a theory, you will read like a theory. Practically, I'll give an example which we have come across in this duty fulfillment obligation. There was a tool imported. This tool imported is in semi-finished goods stage. This was processed and then exported. Yeah, exported. Now, when I say tool which is in semi-finished goods stage, there is some, say, let's take example of this particular pen, what you're seeing. The pen, what you're seeing in my hand, is a steel carbide. It's a steel product where it's in a cylindrical fashion. This particular pen, what you're seeing here, this has got two knobs here. Like this is like in a mouse, I have left click, right click. For this pen, there are two clicks, top click, bottom click. Now this particular click, what you're seeing here, there's a small insertion. I manufacture this particular, click. I insert this particular click in India. Also, this particular pen has got a top nib. This particular nib is manufactured in India. Then I export it back. After exporting, I filed an application for discharge certificate. My foreign trade officer, that is regional authority, asked, prove me why I have to give this EODC. Prove why I have to give this EODC. I said, sir, I imported a tool, I processed, I exported. Then he asked, do you have any correlation or I would say not relevant. Do you have any evidence to say the same goods are processed and exported? Prove me this. Reason, the tools which are imported, which are in semi-finished goods condition, I have used these goods in export. I also sold these goods in domestic tariff area. The pen what I've shown you, these goods which are imported, I manufactured and sold in India. I also imported and exported back out of India. There, I have to give something called identity. Now, there is something called inspection report. Inspection report. In this inspection report, at the time of import, there is a reference called packing list. In this packing list, there was a part code. Similarly, When I processed and my finished goods are exported, finished goods also I have prepared something called packing list. In this packing list, I also added one column called identity. That is your batch code or part code. So I have proved to this DGFT regional authority saying that, sir, the inspection report available for import, the inspection report available at the time of export, which is by way of my packing list, both this packing list have same identical part code. On the basis of this, my export obligation was given for me. So here, in simple, I'm saying that there should be a complaints with export obligation. So when I say complaints with export obligation, I have to prove to the satisfaction of the consent authority that the goods have been exported. Third condition for your authorization holder fails to deposit a requisite amount within the period specified in the demand notice. This is like your what you call pre-deposit. Unlike your appeal mechanism, when there is a violation, there is a bank guarantee. Bank guarantee. So, if any of the terms are violated before invoking the bank guarantee, customs officer, sorry, the DGFT officer, the consent RA will say, make so and so deposit for the purpose of settlement of this particular violation. So, in case if you fail, then you will be marked in your DEL list. Any information particulars. Now, one another important point is fails to deposit. This bank guarantee was manual for tracking. One connected interesting topic, though it is not connected with foreign trade policy. Very, very interesting point. If you happen to look at your government offices, observe the government offices where my deposit or tax is paid through demand draft. Example, your motor vehicle registration, your property registration, electricity deposit, or any other government approvals. So there are multiple government approvals where this demand draft or bank guarantee is obtained. Now this is a manual paperwork. When you do a CNDG audit, like as a firm empaneled with CNDG, when you do audit of any of this ESCOM, you do any ESCOM audit, you will find one internal audit para saying that there is no track for how many DDs are received during a particular period. These DDs are deposited and these DDs are encashed. Unfortunately, this is a plight where still the government offices, administration, where there is no automation. Why no automation? Consent authority have not taken initiative. So here, on those cases where my bank guarantee which was given, like the third point which I was saying, initially I would have given bank guarantee which is manual. After a span of 12 months, bank guarantee is expired. DGFT authority never asked for renewal. I also kept fine. Now, I forgot, DGFT authority also have forgotten. As per my license, I have 18 months. I have a period of 18 months for meeting my export obligation. So I have forgotten, and the DGFT officer comes to know this aspect after a span of 36 months. Now, unlike your GST portal, there is no robust system under DGFT all along. So they get to know that there was manual bill of entry or manual so-and-so thing where you have taken so-and-so license. You are supposed to meet export obligation 18 months. In spite of 3 years, you have not come back. By the time they could realize there is a bank guarantee which is also lapsed. Then what you will do? They will say, please come and deposit. Then I'll give you your your license will be put into active mode. If not, it will be put into DEL, denied entry list mode. Any information or particulars furnished by the applicant subsequently found untrue or incorrect. This generally happens in relation to process or CON conditions. Like what is your business process? What is your agreed upon applicable CON category? So implications. What are the implications of DEL? The firm may be placed under DEL by the concerned RA. In such a case, the firm may be refused for renewal of a license, authorization, certificate, script, any instrument bestowing financial benefit. So whatever benefits are there, those are going to be restricted. Those are going to be curtailed. That's the first one. They're saying that whatever license you have to renew means, sir, this is having 6 months validity. Please extend by another 2 months. They'll say, no, I'll not do. Authorization, new letter, new authorization, they'll not give. Certificates, they'll not give. Sir, I have a script, I want to sell it. They'll say, no, you're not supposed to sell. All your aspects are put to ban. Like your enforcement, ED. When a person was put under ED list, his visa will be put on suspension. His bank accounts will be under suspension. His international trade license will be under suspension. So all aspects will come to a standstill. All new license authorization scripts, etc., will be blocked from printing or issue or renewal. Printing, where there is a manual customs support, or issue of a new license or renewal of a existing license. Firm's name can be removed if any of the conditions or obligations are met or payment is duly made. Now, these are the implications of your DEL. Examination, a theory question from DEL point of view. Actual user condition, I explained this. Goods which are freely importable, there is a restriction casted because of the nature of those goods. May be imported by any person. Now, say baggage they have kept out of any authorization. Allowed to be imported as passenger baggage without any authorization. I'm just skipping the other aspects which are not relevant now. Yeah. Second-hand goods. Second-hand goods, if you look at the entry, capital goods other than capital goods. Capital goods. In capital goods, there is a import of capital goods where there is authorization and there is a conditions attached. The conditions attached for AC, DG set, desktop computer, refurbished or reconditioned, repair, spare parts of personal computer, all notified under ITC goods. This is your restricted category. Free category, refurbished or reconditioned spares, capital goods, where chartered engineer certificate is there for 80% of residual life. Now, this is the important aspect which flows to customs law also. I referred somewhere earlier, a chartered engineer has to certify that there is a residual life more than 80%. All other second-hand capital goods other than those listed above. So other than these goods, this is under free category. Other than capital goods, imported for purpose, repair, refurbishing, reconditioning, etc. Freely importable, subject to specified conditions. Remaining goods, restricted for import and can be imported only against import authorization. So I have goods which are meant for repair, etc. can be imported and after repair to be sent back. Other than repair, etc. are freely importable unless there is a condition imposed. Now, bank guarantee, letter of undertaking, bond. Now, you remember star status holding. In case of star status holding, I need not give any bank guarantee. Simple letter of undertaking is good enough. Exports, I'll explain third-party exports. Third-party exports is like your merchant export. or let me come to my PowerPoint presentation. Let me just use that slide. There's a list of items which is under exports, which is connected with third-party exports. It means this is made by an exporter manufacturer on behalf of another exporter. Say, let's take example of food items, food products. So there is a manufacturer. There's a manufacturer called X. There's a manufacturer Y. There's a manufacturer Z. X manufacturers say ready to eat idli or your what do you call that upma. Y manufactures your ready to eat paratha or chapati. And Z manufactures something called ready to eat sabji, which is your curry. Now, all three are individual manufacturers. Now, there is a trader by a name called XY. Let me not confuse you. There's a trader by name PQR Limited. PQR Limited. This particular PQR Limited does a packing activity. What it does, it packs X products plus Y products plus Z products as a bundle. Where it says weekly planner. In the sense, he says, don't worry about your food. I'll give you a day. Monday, upma kao. Tuesday, idli kao. Thursday, paratha kao. Friday, chapati. Again, Saturday, go and eat something what you want to eat outside. Don't come to me. So he's going to give a menu for 4-5 days. So here, this particular trader is called as your merchant exporter. Now, when this particular trader exports the goods in the respective bill of, shipping bill, in the respective shipping bill, he mentions that the details of PQR Limited as trade merchant exporter, details of X, details of Y, details of Z. His name is mentioned as trader, and this people name is mentioned as manufacturer. Their name is mentioned as manufacturer. Now, this is a clarity given to the customs authorities where when I look at a particular shipping bill, there's an indication, there's a reference that so-and-so person is a manufacturer. And this particular person is called as a merchant exporter or is called as a third-party exporter. Is called as a third-party exporter. This particular third-party exporter, this particular third-party exporter will be realizing money in foreign currency. Now, so what is the advantage of this particular entire route? Here, XYZ, probably Y could be a person who have been importing goods without payment of duty. And Y is exporting goods via or through Mr. PQR Limited. So here, the benefit of export obligation will be met on account of PQR Limited declaring the details of Y on a particular shipping bill. So once the goods are exported, because of shipping bill consists of the details of Y, that data travels to DGFT for compliance of any export obligation thereof. So here, indirect route, goods exported through merchant exporter also considered for the purpose of this benefit. Third party exports. Now, basic aspects. Export Promotion Council. Export Promotion Council are these organizations which are set for identifying and promoting and developing to give a knowledge to the local importer and exporter. So these importers and exporters, they're given a certificate called your membership certificate. Like CA, we have ICAI certification. They will be given RCMC, registration cum membership certificate. Now, we are starting with our basic topic for today's discussion on duty exemption and remission scheme. Let me see any doubts before I start with duty exemption and remission scheme. नम्रता, रामायण पूरा सुनने के बाद लिखना after hearing entire Ramayan story, you should not ask what is the relationship between Rama and Lakshmana or Rama and Sita. Don't mistake me. You're asking what is the purpose of DGFT. The first day I said DGFT is an entity which is under the purview of Ministry of Commerce and Industry. Maybe you missed the first 15 to 20 minutes discussion, or you have not recapped, you have not read the basic aspects before we started. This happens like for the benefit of you, I'll explain this. DGFT is an authority. It is like a board, which is like you have Ministry of Railways. Under Ministry of Railways, I have something called IRCTC. I have something called RRB, Railway Registration Board. RRB, which conducts the examination. IRCTC, which does this booking of trains and other money activity, right? So here, DGFT is one such body like IRCTC or RRB under Ministry of Industry and Commerce. So this DGFT is under the regulation of Ministry of Industry and Commerce. Valuation of authorization. When we touch upon this advanced license DFIA, you'll get a beneficial law. Bestowing financial or beneficial physical benefits. Like example, say you have this safeguard duty. You have anti-dumping duty. There is an export incentive. There's like something called margin of dumping. How did you get this margin of dumping? There was a financial benefit bestowed upon an exporter by the government of that particular nation. For the benefit of other students, there is a question asked by Namrata. So what do you mean by bestowing financial, physical benefits? We had this anti-dumping duty where there is a margin of dumping. How do I get this margin of dumping? There is a exporter. This exporter got an incentive. This incentive is by way of a financial aid, by way of a duty remission. Now, bestowing, the government of that particular nation said that, look, if you export this particular commodities to India, this particular power consumption will be at a subsidy rate. Assuming per unit 7 rupees is a purchase cost. Instead of 7 rupees per unit, it will be 3 rupees per unit. So why do you ask me to why I am getting 3 rupees per unit? Because I use the power to manufacture the goods which are exported to India. Now, this is called margin of dumping. Benefit bestowed. From where? From the particular government authorities. So here, benefits which are given by the government authorities. Hope this is clear, Namrata. Next. There's one question from Harshit. So what is the capex? What is a capex to? Because we need to give details of export like export country, name, shipping bill, other details. What we have made for month wise is this portal also run by customs authorities. However, there's no time limit to update. We are doing on one time in Monday. This is just a master data created for data validation. Though, though the information flows from IceGate portal, you have to fill some data for EODC purpose. For your export obligation purpose, some data validation is required. So here, instead of the officer taking that from IceGate portal, they're asking you to fill this information for their validation purpose. Right? Now, let's start with duty exemption remission schemes. There are three topics examination they'll be testing upon. DFIA, sorry, advance authorization, DFIA, EPCG. All these three put together, I would be spending 45 minutes where we will understand the background of this license, the terms and conditions of this license, how it gets validated, the terminologies which are used, and finally, the modus operandi of this certificate for these schemes. Objective: duty exemption remission scheme enable duty-free imports of inputs for export production, including the replacement of inputs or duty remission. The same duty exemption and duty remission. Remission is to waive off. Remission is to give away. This scheme enable the duty-free import of imports which is used for export production, including replenishment of inputs or duty remission. Used in as it is condition, like replenishment of imports is as good as space, which is mandatory to be going along with my finished product. So there are various mechanisms where my duty remission takes place. My duty remission scheme in your syllabus, one is advance authorization, second is duty-free import authorization. Prior to Foreign Trade Policy 2023, I have around 4 to 5 schemes available as on today. These are the two schemes which are available. Second, duty remission is by way of a benefit which is given back to you, where post-export, I import, I manufacture, I export. Then replenishment, I get back the benefit. Remission of duty on inputs used in export product, duty drawback scheme administered by Department of Revenue, designated for this purpose. Scheme for remission of duties and taxes on export products, RODTEP, remission of duty and taxes on export products. Schemes for rebate of state central taxes, ROSCTL. I'll explain these provisions in a simple fashion. Imports used in production, assembly, or provision of service to be exported, subject to given terms and conditions. So here, there could be a criteria where there is a duty-free imports which are given under your this duty-free remission, etc. So here, first they are talking about exemption. I'll give you an exemption. That means don't pay customs duty, import the goods, use it for any of this activity, export. This is one modus operandi. Second modus operandi, imports are used in manufacture or process, production, or used for rendering services. And those goods are exported, where In this case, duty is paid. This duty paid because you have exported, you'll be given with a benefit called duty remission. Duty remission. Now, this process of duty remission is a mechanism where there is a quantification of the element of duty which is given back to you by way of a duty drawback, or this is given back to you by way of a script called RODTEP. Duty drawback is like money in bank account, which is a percentage fixed by customs authorities. RODTEP is like a script. This particular slip is like money in electronic credit ledger, like your GST. My input tax credit, which is there in electronic credit ledger, I can use it for payment of my output tax. This money, which is there in electronic credit ledger, I can use it for payment of basic customs duty. So this particular script is something I can use the electronic script what is there. I can use it for self or I can transfer. Now, to give an example, say, let's take example. Mr. A purchased, did a process, and did a export. This is one-time activity, and this resulted in a script of, say, rupees 2.2 lakhs. He got the duty as reimbursement of a remission by virtue of RODTEP for rupees 2 lakhs. This 2 lakhs will be credited to my electronic credit ledger. Remission of duty and taxes on export goods. The element of duty paid by Mr. A at the time of import. Now, this is a assessment done by the DGFT authorities on some parameter. Forget that mechanism. So there is an entitlement for rupees 2 lakhs. Now, this rupees 2 lakhs A can use for next imports. On the imports which is going to be done by Mr. A, if there is any customs duty to be paid, that duty can be paid using this 2 lakhs, or this rupees 2 lakhs worth script can be sold to Mr. B. Now, what does Mr. B will do? B will use this script for payment of customs duty. Payment of customs duty. Yes, Balaji, I'll discuss this slide and we will have a break now. Maybe another minute or so, we will discuss and we'll have a break. Now, Mr. B has to pay a customs duty for rupees 3 lakh. So what he does, the script will be sold by A to B. Say, A sells the script for 2 lakhs at a discount of 10%. That means to say 1,80,000. B will pay to Mr. A rupees 1.8 lakhs, where the face value of script is rupees 2 lakh. That means to say 20,000 is a saving to Mr. B. So why A is selling at a discount of 20,000? A is not in a position to use this script for next 3 to 6 months. Now, why should he block the 2 lakh script? Rather, there's a party in the open market who is willing to buy that script. So A sells this script to Mr. B at a discount of 10%. B makes 1.8 lakhs cash payment or bank transfer. From B will make the payment to A. Now, coming back to this 3 lakhs. B will pay 3 minus 2, 1 lakh through his bank account. And there is a debit in electronic credit ledger of Mr. B to the extent of 2 lakhs and 1 lakh in cash account or bank account. This is how my duty payment gets paid using a duty credit script. So this is a fulcrum of my duty remission scheme where duty drawback money getting into my bank account, or under RODTP there is a script. Instead of money given to you, a script is given which is a transfer to my electronic credit ledger. This money which is there in electronic credit ledger, either I can use it for myself or I can transfer. Option 1, you can use it for self. Option 2, you can transfer this particular script. Students, we are at 7:35. Let's have a break for 10 minutes. Let's resume back at 7:45. Let's start with our discussion. Namrata is asking, sir, can you throw light on this import-export, page number 25? Uh, Namrata, it's very simple. Import and export. There is a interlink between Ministry of Industry and Commerce with that is DGFT with Reserve Bank of India, right? So, as per your RBI regulations, any money which is exported, any goods which are exported, there should be a repatriation of money in foreign currency. If money is not repatriated in foreign currency, any benefits attached, to this particular export should be returned back. Hope this is clear. So here, in case if I have exported the goods where I have enjoyed duty-free import, that particular duty I have to pay it back. If I have exported the goods but I have not repatriated, assuming I have got a benefit of duty drawback, that duty drawback I have to pay it back. So likewise, are the conditions attached where money not released in foreign currency? So what if it is beyond my control? Like example, Ukraine, Russia. So I exported the goods. The party was not able to remit because of some disturbance at the bank. Probably write a letter to RBI, make a declaration that this is not in my control. I couldn't repatriate because of so and so given reasons. So those are the exceptions with respect to import and export. Hope this is clear now. And am I clear with discussion whatever we had so far? Are we clear with the discussion so far? Ashok, am I audible? Are we live? Ashok and we are live now? Okay. Okay. Now let's start with the next topic for discussion, duty exemption, which is advance authorization. Advance authorization. Authorization, as the name goes, it's a license which is given in advance. That's why they call advance authorization. Items which can be imported duty free against advance authorization. What is that again? Import. Point number one, input that is physically incorporated duty free against advance authorization. Input that is physically incorporated in export product, making normal allowance for wastage. So whatever normal loss is there, barring normal loss, inputs used in your export. Fuel, oil, catalyst, which is consumed or utilized in the process of production of export product. So any power related consumable is there, even that also can be imported without payment of duty. Eligible applicant. Who is the person who can file? So here they have given inputs and fuel, catalyst, etc. What is excluded here? Capital goods. So here they're talking about inputs and fuel, etc. Eligible applicant. Advance authorization can be issued either to a manufacturer exporter or merchant exporter tied to supporting manufacturer. Can be issued to a manufacturer exporter or merchant exporter. Manufacturer exporter is a person who manufactures and exports. Merchant exporter is a person who does a trading activity on behalf of a manufacturer. Please understand there's a difference between manufacturer exporter, merchant exporter. This gentleman does the manufacturing activity. This person does the trading activity. This person does the trading activity. Now, so here they say that this license can be given either to this gentleman or it can be given to this gentleman. So why they want to give to this gentleman? Because this gentleman is causing the export for those goods which have been imported, which is tied to supporting manufacturer. So this gentleman is tied with a supporting manufacturer. So advance authorization can be either issued either to a manufacturer exporter or merchant exporter tied to a supporting manufacturer. Moving further. Eligible supply. What kind of supplies are eligible for this particular advance authorization? This is issued for procurement of inputs for the following kind of supply. This is your output. My exemption on input, which is used for following output. Physical exports, including exports to SEZ. So, my actual exports, including sub exports to SEZ. Now, this particular line, I refer to something called money repatriate in convertible foreign currency. Intermediate supply. Intermediate supply, advance authorization holder supplies to another advance authorization holder for intermediate process. So one gentleman who is having license gives to another gentleman. This gentleman makes a further exports. Like example, X, Y. X imported the goods. Y was actually obtained a license to procure and export. Instead of importing, Y procures from X. Y procures from X. So any goods which is sold by X to Y can be called as an intermediate supply. Deemed exports, your EOU, your STP, your BTP and other things. So goods don't leave India, they are considered as deemed exports. Money realized in foreign currency where reference to FOR value. Money realized in foreign currency referred as FOB value. These are the eligible supplies. So under advance license, any goods which have been purchased without payment of customs duty, I can use those goods where the goods which are processed, which are manufactured, are actually exported or supplied to SEZ, or which is given to an intermediate supply and or deemed exports. Now, these are the supplies which can be considered for advance authorization. Now, basis for issuance of AA. How does this authorization, how does the officer will give an advance authorization, advance license? Now, what goods you should procure and what quantum you should be getting the benefit. This is that. Advance authorization is issued for those inputs which are related to resultant product. I know input, I know output. On the following basis, as per CON notified, or this is where there is a CON notified, or on the basis of self-declaration, or on the basis of application specific for fixing this particular standard input-output norm by the norms committee, or on the basis of self-ratification scheme. This self-ratification is correction to the self-declaration what was made. So here, generally on the basis of your reference of standard input-output norm, I will know that for the output which is getting manufactured, the relevant inputs shall be identified. So this identification could be already notified or I made a self-declaration. So there is no process which is identified by the government. So I give a self-declaration. Based on the self-declaration, proper officer says, okay, you are permitted to procure so much of goods. Applicant specific fixation by norms committee. Now I'm into industry where there is a specific process oriented. So there is a norms committee who is going to fix this particular CON on the basis of self-ratification scheme. These are the various modes where there is an identification. Now, ratification, I go beyond what is declared on the basis of additional procurements. So I get it ratified by the consent committee for consumption. This is your self-ratification scheme, which is a additional inputs beyond what is fixed. Now, eligibility. Is every importer eligible for this scheme? Answer, they say that an exporter who is a manufacturer merchant exporter who is having a AEO certificate. This AEO certificate is issued by Customs Authority, Common Accreditation Program issued by CBIC for the eligible exporters. So the person who is eligible to hold this AEO certificate is identified as an exporter who can get the benefit of this particular advance authorization. And in that, they say status holder who is a manufacturer come actual user, who is holding valid 2-star and above. So AEO operator who is having over and above 2-star, who is an actual user and holds valid 2-star or above or equivalent to 2-star, who's already submitted its application for grant of AEO on CBC portal, can apply for this scheme. So minimum, now when you look at AEO scheme, there is a particular criteria based on which AEO is awarded this particular quantification. So based on my customs track record, based on my last 3 years average track record, I'll be getting this customs AEO certificate. I should be a regular trader. I should have a self-certification. I should have a capacity. I should have a facility. I should be compliant with all the schemes. So based on certain condition, I have been accredited with AEO. This is like your ISO certification. This AEO is given from Customs Authority. So people who are having this 2-star status or above 2-star status are entitled for this particular scheme. Pre-import condition. Now, pre-import condition, there is some example there. There is a reference to ANF4J, where there is a reference of this pre-import condition. I'll read and I'll explain this. Imported inputs are subject to pre-import condition. They should be physically incorporated in the export product, making normal allowance for wastage. In case of local procurement, under invalidation ARO, inputs shall be procured prior to manufacture of export item, shall be physically incorporated in the export product. Now, there is an incorporation of, say, like example, pulses. Or let's take example of this pepper. Pre-import condition. Now, pepper imported, pepper exported. I import pepper, I export pepper. What is the difference between these two? Now, there is a process called segregation, then cleaning, then drying, then final product. Now, when I do this activity of segregation, cleaning, etc., I should have an identification, pre-import condition. What is the condition at which you are imported and what is the condition at which you are exporting? So there are a few norms for pre-import condition. These norms should be allowed after making some provision for nominal normal loss. There is a reference to a term called invalidation or ARO. Procurement under invalidation or procurement under ARO. I'll explain this technical terminology. What is invalidation or ARO? Then we will come back to AA. Let me just take one blank screen. Your institute material, page number 8.30. There was a reference made to invalidation letter, advance release order. Or advance advance release order saying XYZ Limited imported goods with payment of duty. PQR Limited is a advance authorization holder requiring some inputs. Now, XYZ has imported these goods, say from Germany, which is in surplus quantity. This particular PQR Limited have placed order with the same supplier in Germany. Some reason there is a there is a time lag or there is a non-availability of goods. Now, this supplier says, look, there's a gentleman called XYZ Limited. He has got sufficient stock. Why don't you procure from this particular gentleman? So here, PQR Limited, instead of using advance authorization for import, he writes a letter to the concerned regional authority saying that invalidate this license for import to Mrs. XYZ Limited. In the sense, allow me under this advance authorization license, under this license, allow me to buy these goods from XYZ Limited. Chalo. RA says, go ahead and buy these goods from XYZ Limited. So when XYZ Limited sells the goods to, say, PQR Limited, there's a burden of duty, which is factored as cost. In the sense, XYZ Limited, whatever duty they have paid on imported goods, this was added as cost to their procurement. Now, this particular burden of duty is removed through this advance release order. This particular element is removed through advance release order as remission. In the sense, the money will be paid back to this entity called PQR Limited. AA holder shall be remitted with duty amount. So here, because PQR Limited was not in the position to use this license for imports, and those goods are already available with XYZ Limited, PQR writes a letter to the concerned regional authority, my dear officer, please reroute this license. Instead of coming from import, there is a domestic fellow already there. You permit me that license be rerouted to this entity called XYZ Limited. So I'll give this license to XYZ Limited saying that, boss, please give me your material, give me your bill of entry so that I can produce this as an evidence to get this ARO done for the duty element A. This is called my invalidation letter. Validity period for import. Once the license is issued, this license is valid for span of 12 months. That means within 12 months, I need to cause the import of goods into India. So under this particular license, any goods which have to be procured, I have to procure within a span of 12 months. In case, sir, I am not in the position to procure within 12 months, then there is a one-time permission called revalidation for additional 12 months. This can be done only once. And this is done online. Harshit, you have asked this question, ma. Is this being done physically? How is that application being done? All these processes automated, man. These days you will go to your website, you log in through your particular login ID and then file an application. Sir, if I'm not able to use this particular license for whatever be the reasons, then seek for revalidation where the time lag will be extended for another 1 year. Now, eligibility, advance authorization for annual requirement in eligibility. The person who is holding this advance authorization, it shall be used only for those items which are mentioned in CON or what is given as a self-certification, right? As a self-declared, when there is no CON. Based on your AEO status, I'll be getting this particular advance license. Now, what is the volume of procurement? What is the volume of purchase permitted? They say that my entitlement is CAF value of import should be 300% of the FOB value of physical exports and or FOR value of deemed exports in the preceding financial year or rupees 1 crore, whichever is here. Now here, this procurement is subject to a condition, annual requirement. How they are going to release this particular advance authorization. So here, I'll explain this by way of a example. Say 10th April 2022, application is filed. So my concerned regional authority has to approve the advance authorization. Now, when they approve advance authorization, there should be a quantity or value of imports. As I mentioned, standard input output norms, CON, is going to be the base. So they are saying that you have imports, you have exports. Exports could be on FOB value, could be on FOR value. FOB value in case of actual exports, or it is in case of Harshit, your first point of turnover calculation, slightly connected with this slide one. FOB value of exports or SEZ supplies. FOR value of deemed exports. So why I am doing this? FOB value, when I refer, this is in foreign currency. This is in foreign currency. FOR value, free on road value, this is in INR. Now this both put together is called exports. This exports into 300%. Or no, they have linked up to, let me come back to your slide. Shall be 300% of FOB value of physical export or FOR value of deemed export in preceding financial year or rupees 1 crore, whichever is higher, or rupees 1 crore, whichever is higher. Now, my imports valuation rules, section 14 refers to CAF value. So this CAF value, when the license is given, now when they are giving for 10, when the application came on 10th April 2022, they will say for imports for the period April 2022 to March 23, when I have to give a license for this particular period on the basis of reference to SION, either 300% value of FOB value or FOR or rupees 1 crore, whichever is higher, this value will be entitled as annual value. So how do you are going based on this annual value? Again, there is a factor, what they are saying, I'll go on the basis of exports having past export performance, at least in the last preceding 2 financial years shall be entitled for advance authorization. So I'm going to judge your performance on the basis of your last 2 years performance. What is it you have procured in the last 2 years? That will be the criteria for me to keep that as a base. Yeah. Then value addition. When you are importing and exporting, my FOB value of exports compared with CEF value imports. I have imported goods for say 120 rupees. This is import and export is being done for say 120 rupees. They'll say, what is the value addition? Value addition is nil. There is no foreign currency which is coming into India. Why should I give a benefit? Similarly, so this is scenario 1. Scenario 2. My value of imports is 100. My value of exports is 110. They say that, look, this value addition should be minimum of 15%. In this case, you are giving a value addition of 10%. I cannot give you this permission. Scenario 3. My imports value is 100. My export value is 130. I did a value addition of 30%. They're saying that minimum value addition required to be achieved under advance authorization is 15%. Or in case of specified products, that is petroleum products, etc., valuation could be less than 15%. Because the market values are regulated, I cannot play around much. So there is a lesser valuation expected. Now what happens? Sir, officer, that is RA, gave me advance authorization. I have been given a time span of say 6 months. In 6 months, I made exports. At the end of 6 months, I realized that my value addition is less than 15%. Then probably you remember that DEL, denied entry list. I may be put into denied entry list if I have not paid the duty benefit which was claimed, which was foregone by the authority concerned. This is how I will examine my valuation for advance authorization. Moving further, mandatory value of space similar to your inputs and catalyst, that is fuel. There are at times some space to be mandatorily given with my finished product. They say that validation when your annual authorization when you are getting space that are required to be supplied with export product can be imported duty free under advance authorization up to 10% of CAF of authorization. So if I get say 1 crore as my annual value into 10%, 10 lakhs. 10 lakhs will be the space which can be imported without payment of customs duty under advance authorization. This is how stores are regulated under advance authorization. And what benefits? So you're saying that there is a benefit of duty exemption. What duties can be waived off? Basic customs duty, additional customs duty, education cess, anti-dumping duty, countervailing duty, safeguard duty, transition product safeguard duty wherever applicable. Now this is your, it's a agriculture related safeguard duty. All these benefits are there under advance authorization. Also, there is exemption of IGST cess. Now, actual user condition. If at all, if there is an advance authorization which is given, where this import material are subject to the condition called actual user condition, then the same shall not be transferable even after completion of export obligation. So here, the goods which are imported, those goods which are subject to actual user condition. You remember, one AA transferring intermediate product to another AA. Why? This fellow could not export at that stage. Output of this fellow is an input for this fellow. And this fellow process and then that's the actual export. So when the goods are subject to actual user condition, it cannot be transferred from one person to another person for meeting your export obligation. That is your intermediate supply. This is something which is not permissible. Intermediate supply is not permissible. FOC supply by a foreign buyer. Notional value of advance authorization is also available where some or all inputs are supplied free of cost to the exporter by foreign buyer. My buyer who is there abroad, he has given some goods on FOC basis. Now, when I get these FOC items, even these FOC items under section 12 is deemed to import. Once it is import, though there is no value, I travel to rule number 4, identical goods, and I affix the value. So they are saying that in those cases, though the goods are without cost, in such cases, notional value of free of cost input is added in the CAF value of import and FOB value of export for the purpose of computation of value addition. So what they are saying, CAF, FOB. CAF is for import, FOB is for export. They are saying that some notional value is added in my purchase. Similarly, notional value is also added in my sale. Why is this considered? To examine value addition of 15%. They're saying that, assuming that, say, 3 lakhs worth goods are imported as FOC. Now, because these goods are coming into India, section 12 says that like duties on imports, not on consideration actually paid or payable. I pay notional customs duty. The same notional value will be taken for FOB to match with my value addition. Export obligation period and extension. They say that export obligation means obligation to export product or products covered by AA in terms of quantity, value, as the case may be prescribed by the regional competent authority. Export obligation of advance reservation is issued for 90 for such items which shall be 90 days from the date of clearance of import consignment, and no extension of EOP shall be allowed. So here, my annual authorization which is there, I split this particular value and assuming I got a value for 300 lakhs. Out of 300 lakhs, month 1, I imported consignment for 25 lakh. So this month 1, whatever I have imported for 25 lakhs, within a period of 90 days, I have to process, I have to export back. Month 2, out of 300, out of say 50 lakhs, I drawn another consignment. Again, a span of 90 days, process, send back. Month 3, another imports were 150 lakhs were there. Now, all this value I'm consuming from annual consumption. So they say from the date of clearance of import consignment, within 90 days, I have to do export obligation. Such import shall be subject to actual user condition. No transfer shall be made for raw material, duty drawback, etc. They say that in relation to this advance authorization, any duty drawback which is fixed by the customs authority, my duty drawback is fixed by customs authority, is available. I can claim duty drawback for duty paid on imported or indigenous inputs, which is not specified in the norms used for export product. For this purpose, applicant shall indicate clearly details of duty paid input in the application for advance authorization. So here, there is a imports, there is a domestic tariff procurements, which is used for export. So they are saying that when you do export, on export, you are going to get duty drawback. When you are getting duty drawback, this is not in relation to the duty paid on imports. In case if there is any duty paid on other goods, which is suffered in the production and exported back, I can claim my duty drawback. They are saying that applicant should indicate the details of such duty paid in the application for advance authorization. This is what they're saying. Now, I'll just skip the other aspects which are not that important. Domestic sourcing of inputs. My holder of advance authorization or DFA can procure from locally also, because some imports are related to state trading enterprise. I don't have a choice. I will not import. Rather, I'll procure from STA, that is within India. Currency for realization. My export process can be in foreign currency in case of actual exports, INR in case of deemed exports. Then next scheme called DFIA. Before DFIA, let me see if any doubts are there. Namrata says invalidation letter not clear. No worries, I'll explain that. When Harish says, so we are holding DFIA certificate, EEO certificate, EA certificate, taking benefits of ROD duty drawback. Pending is only the status of Acha. Okay. You are yet to travel to get a status holder certificate. I wish you get qualified and you become a CFO of that particular company where you get a 5-star status holder certificate. Becoming a CEO, becoming a CFO of an entity which is having 5-star status is as good as you are getting a 5-star accreditation for yourself. Namrata, I'll clarify this invalidation letter again, ma. Yeah. See, invalidation letter is very simple. Very simple, crude way I'll put it. Advance authorization. Advance authorization is meant for import. It is meant for import. The license clearly says it is meant for import. Now, what happens? Sir, I got a license, but for some reasons, I don't want to import. There's one local supplier. I want to buy goods from that supplier. Can I use this advance authorization to procure goods from that particular supplier? Answer is a big yes. So when I procure the goods from that particular local fellow instead of import, what happens to that import? That fellow was already imported the goods and paid the tax. Using this technique called invalidation letter and advance release order, I get a refund of that particular duty which is already paid. Let's put the example this way. Say, I have imported the goods on January 2023. Sorry, not January 2022. Now, these goods are imported from particular exporter in Germany. Jan 22 till September 22, I was not in a position to consume the goods. I wrote a letter to my supplier. Yeah, I'm not able to consume. Can you buy back these goods? My supplier says, no, I'll not buy. Do one thing. There are a lot of formalities in import-export. I don't want to get hold. Later point in time, Namrata approaches this Germany vendor, says, I need to buy 50 items of these goods. That fellow in Germany says, look, you want my product, right? Instead of I sending from Germany, there's a fellow called Praveen. You go and approach Praveen, he'll give the goods to you. Now, Namrata is holding advance authorization. So what does Namrata will do? This license she will use, she'll write a letter to RA. Look, I want to procure from a local supplier called Praveen. RA says, go ahead. Then she purchases the goods from Praveen. Praveen says, look, this is the goods I purchased. This is the customs duty I paid. This is the bill of entry for that. Now, Namrata, based on this factual data, she writes back to the RA saying that Praveen paid so much of customs duty. I took the burden. Now, because Praveen doesn't have authorization, I have authorization. Kindly give me a refund by way of remission, which is called ARO, Advanced Release Order. That means release that particular customs duty to me by way of a remission. So here, Praveen imported the goods, paid the customs duty. The benefit of that customs duty is enjoyed by Namrata, which is technically called as invalidation letter or ARO. This is a process. Hope this is clear, Namrata. Moving on to DFIA. Quite simple topic. Duty-free import authorization. By and large, whatever provisions I have read in AA are broadly applicable to DFIA. The only difference is this authorization shall be issued only for products which SION have been notified. So point number 1, there should be a SION available. Only where there is a notification for standard input-output norms, I will give DFIA. So if exporter says, sir, I will fix the SON. They say no. Sir, I want to have ratification. They'll say no. Wherever there's a notification, only that I'll go. It's a policy matter. Now here they say that duty-free import authorization is issued to allow duty-free imports or inputs as well as oil and catalyst, which is consumed or utilized in the process of production of export product. This is DFI is allowed for duty-free imports. Import of tire under DFA is not allowed. This is a exclusion. This is a exclusion. Now, DFA is issued to allow import of inputs as well as catalyst, which is consumed or utilized in your production of export. So here they say the duties exempted is only basic customs duty. Drawback as per rate determined and fixed by customs authority shall be available for duty paid inputs whether imported or indigenous used in the export product. So unlike your AA, they say that my drawback is available for duty paid inputs whether imported or indigenous used in export product. And my benefit of import duty only for basic customs duty is there. For advance authorization, all the list, safeguard duty, advance anti-dumping duty, your countervailing duty, all these benefits are there under advance authorization. But under DFIA, only this particular customs duty is there. What is a person? Who is the person eligible? My DFIA shall be issued on post-export basis for products for which SON has been notified. So, I export for which SION is there. Based on your export, you will be entitled for duty-free import authorization, which is nothing but a script. Application is to be filed by the consent with the consent RA before starting your export. So what I'll do, assuming that March 23, there is a consignment which is going to be exported. So beginning of March, I'll file a application. This is online with the consent RA. Merchant exporter shall be required to mention name and address of the supporting manufacturer of the export product or export documentation in the shipping bill of export. So either manufacturer or merchant exporter, their details have to be available on shipping bill. This is what they're saying. No DFA shall be available for inputs which is subject to actual user condition. They're saying that because if inputs are subject to actual user condition, DFIA benefit cannot be allowed. And unlike your advance authorization, in case of DFIA, minimum validation required is 20%. Transferability, RA will issue a transferable DFIA. Whatever script is there, this script is permissible for transfer. Now, they say that when you file an application saying that you are ready for export, from the day you file your application, within 12 months, the date of filing the online application, your export shall be completed. All your export shall be completed. From the day you file an application, within 12 months, you should export those goods. And this license which is given to you, it has a validity for 12 months from the date of issue. No revalidation and separate DFA shall be issued for each SION. Now, I'll summarize this DFIA in a quick manner for advantage for once again. DFIA, how it works. In case of AA, this is advance authorization. This is for imports. DFIA, this is on exports. Sir, how do I know on exports I have to give DFIA? The DGFT officer says, look, wherever SION is notified, only on that, this DFIA is permissible. They see that when you have value addition 20%, when you have value addition 20%, your inputs are not subject to actual user condition, then they say that file an application for DFIA. The date when you file your application, from this date, within 12 months, do the export. So why you are giving 12 months? Reason, when I file my application, this needs to be approved. It does not get approved just like that. When I file an application, like for a moment, let's assume that Mansa is sitting as a RA. Namrata filed an application. Mansa will say, Namrata, please show me your IEC. Get me your production process. Get me the SION. Get me the relevant notification which you are examining. Get me your declaration that goods which are used for manufacture. Show me whom you are going to export. So there are a couple of aspects which are verified, and then your application is approved. Once an application is approved, I will export within 12 months. I will export within 12 months. I will also show repatriation of foreign currency or INR. On the basis of this repatriation, I will be given with a script called DFIA script. Now, what is the benefit of this script? This is as good as my electronic credit ledger. I can use this particular script for payment of basic customs duty alone. Payment of basic customs duty alone. And this script is transferable. This script is transferable. So what is the time limit? Time limit is 12 months. That means to say, from the day I got this script, within 12 months, either I have to encash or someone has to encash. Say, Mansa, like Namrata. Namrata has got a export and she did the export. She showed satisfaction of repatriation to Mansa. Mansa being a regional authority, she approved this particular DFIA script. Now, this particular DFIA script, either Namrata can use for sell or she can transfer to Harshit. Now, this either consumption by self or consumption by Harshit should be done in 12 months time. So how does this transfer etc. happens? Generally, whenever the script is given, the script will have license number. That is your authorization number. And this authorization number needs to be registered on customs portal, that is ICAI. On ICAI portal, I need to register this license. And once this is registered, this can be declared by any IAC. Whoever is having this license, they can declare and they can encash this particular value. This is the sum and substance of your DFIA scheme. Let's move on to next topic called duty drawback. Duty drawback, it's a nominal amount where in addition to your scheme like advance authorization, DFIA, any goods which are procured, which is subjected to customs duty, which is processed and exported, I am not in a position to claim the benefit of duty drawback. Sorry, I am not in a position to claim exemption from the customs duty. Then customs have notified a drawback. On the basis of your HSN, a fixed percentage of FOB value will be given back to you as money in your bank account. That's called duty drawback. Then there's one more scheme called remission of RODTEP. This duty drawback is paid by customs authority. This RODTEP is paid by your DGFT authority. Now this remission of duty is like a percentage of your FOB value is given back you as a refund. Like example, say Harshit, Sunita and say Rahim. All these three people are domestic people. They are not aware of advance authorization. They procured imports, they used in manufacture. 85% is sold in India, 15% is exported. Now, because customs duty was paid on their imports and those goods are going out of India, as a percentage of the goods which are manufactured, which are subjected to customs duty, they come out with a particular formula. They say 2% to 5% is the value on which you will get this money as a scrip. So remission of duties and taxes is like a scrip given to the exporter. That scrip can be used either for self or scrip can be transferred to another person for payment of customs duty. The script is only for basic customs duty. I can transfer this particular script. And this is fixed as a percentage of FOB value of exports. Next, EPCG scheme. Let me see any dots before I start with EPCG scheme. Positive time, Namrata, because I have this is the last session. I'm going little fast now. I have to cover up EPCG. Once EPCG is covered, anything is left out, I'll come back. I could also feel that my DFIA, I went little fast, but again, I need a summary for the benefit of your understanding. EPCG in very simple and short manner, I'll explain. EPCG is a scheme where capital goods are imported without payment of customs duty. For the purpose of this, duty saved into 6 shall be the value of exports to be complied. And this value saved needs to be exported within a specified time limit. As of today, the specified time limit is 5 years. Within 5 years, I have to export the value of goods on which my customs duty was saved. Sorry, it should be 6 years. Within 6 years is the value of exports I have to make. Now, how does my export obligation to be made? Like example, say 50 lakhs worth duty you have saved. 50 lakhs into 6, 300 lakhs. What export I have to do? 500 lakhs worth export I have to do. And they have given that within 6 years I have to do that export. And this particular 6 years was again split into this manner. How? Block 1, block 2. Year 1 to year 4. Minimum 50% of value has to be attained. Year 1 to year 4, minimum 50% of this value of obligation to be met. That is, minimum 150 lakhs worth consignment has to be exported. Block 2 is my year 5 and year 6, where balance 50% has to be achieved. Balance 50% has to be achieved. So here, customs duty saved multiplied by 6, I get the resultant. That is the value worth exports I have to do. And this worth exports when I do, I have been given 2 blocks. Block number 1, where year 1 to year 4, I have to export minimum 50% worth exports. The rest block, year 4, year 5, and year 6, I'll do balance 50%. Then, when you are doing this particular export obligation, there are 2 things. One is minimum exports, another is average exports. They say that your minimum exports it should be worth 300 lakhs. That is 6 times duty saved. And maintain your average for last 3 years record. To explain this, I'll just take my Excel file to give a clarity. Say, my duty saved is 10 lakhs. Export obligation is 60 lakhs. My duty saved is 10 lakhs. Export obligation is 60 lakhs. My domestic supplies is 85 lakh for year 1. Exports is 12 lakhs for year 1. Total is 97 lakhs. For year 2, 98 lakhs is domestic supply. 15 lakhs is export supply. For year 3, 112 lakhs is domestic supply. Exports is 15 lakhs. This is my total value of exports for last 3 years. This is my total value of domestic for last 3 years. Now, average for exports sorry, this is one small formula. Instead of my average exports is 14 lakhs. Average exports is 14 lakhs. So when I import this machinery, year 4, I have imported machinery. Now, I have been given a block of 6 years to export. 6 years I have to export. So what they're saying, see, every year you have to maintain average of 14 lakhs. Since your last 3 years average is 14 lakhs, every year you have to maintain 14 lakhs. Also, the duty saved is 60 lakhs. So entire 60 lakhs worth exports you should do. That means 60 lakhs divided by 6 is going to be 10 lakhs per year. I'm just doing a approximate every year. That means to say, every year my export should be minimum 24 lakhs. Assuming that I'm doing 12 lakh, 15 lakh, 15 lakhs, going forward under EPC scheme, this is how going to be my export pattern. That means to say, your regular average, what you have done, maintain that average. Top of that, attain this average of 60 lakhs. Now, I just gave a hypothetical example of 60 lakhs here, but this 60 lakhs, what I will do, block 1, block 2. Year 1 to year 4, attain minimum 30 lakhs. Year 5 and year 6, attain another 30 lakhs. This is what the DGFT provision say. Under EPCG, when you are importing the goods, you have to maintain this average and minimum, one is average and specific target for your export obligation. Now I'll come back to your institute material. Benefits of EPCG, to import capital goods without payment of customs duty. Who are the exporters eligible for this scheme? Manufacturer exporter or merchant exporter tied up with a supporting manufacturer. Also, service provider, including service provider designated as common service provider. So this is an additional person who comes in your EPCG scheme. What are eligible capital goods? Capital goods in CKD or SKD, computer system software which are part of capital goods being imported. Space, molds, catalyst, etc. All these are the capital goods I can import without payment of customs duty. IGST and compensations. I may pay it under EPCG or it is exempted, let me not pay. If at all I have paid IGST and compensations, while calculating this export obligation, if I have not taken ITC, that extent I'll get a relief, which is called a rebate. Now, one important point, till export obligation is not completed. That means till you are not exported, maintenance of actual user condition. Like you have imported a machinery, don't transfer this machinery. You have imported this machinery. Till you meet the export obligation, you are barred from transferring this particular machinery. And within span of 24 months, you need to import the capital goods from the day you get your license. How much is the duty? I have to, 6 times the duty I have said, I have to export back. So in the process of doing this export obligation, specific obligation of 6 times, average of last 3 years I have to take. So these are the dual condition. Dual condition. Under APCG scheme, your specific obligation, 6 times duty saved. Your average export of last 3 years. So whatever exports you are doing, top of that, you should do this particular export obligation. This is an advantage of EPCG. Conditions applicable to the fulfillment of EPCG. AO shall be fulfilled by the authorization holder through export of goods which are manufactured by him or supporting manufacture rendered by him, for which EPCG authorization has been granted. This is absolute export. Then, for export of goods, EPCG authorization holder may export either directly or through third party. So I can export either directly or through a third party person. This can be done either by me or through a third party agent. That is your merchant exporter. Now, so what happens if I procure this capital goods indigenously? That means instead of importing the machinery, I bought this machinery locally. Like example, Namrata and Shailesh. Shailesh has a machinery which was paid customs duty. Namrata procured this from Shailesh. They say that specific EO shall be 25% less than the actual EO. That means 75% of export obligation if I make, that is good enough. Instead of meeting 100%. Then exports under advance authorization, DFIA, duty drawback, all these schemes would also be eligible for fulfillment of export obligation. Sir, I imported a machinery. I also have advance authorization. I export for advance authorization. So when I'm doing my exports, all exports will be taken into consideration, which also includes this particular exports made under advance authorization, DFIA, duty drawback, RODTEP, all those schemes. Whatever exports you have exported, that shall be taken into consideration. Exports made from DTA. Exports made from DTA units shall only be counted for calculation. Exports made from DTA units shall only be counted for calculation of AEO and export obligation. All those exports which are given to your AEO operator or export obligation. Whenever I exported the goods through AEO status or export obligation, that shall also be taken into consideration. Transfer to your EOU, transfer to other SEZ, transfer to SEZ unit. This also will be taken into consideration. When I say DTA, EOU or your STP, BTP, all that will be taken into consideration. Now, this is the last topic for the day. Any doubts on EPCG? Let me see before we go further. 6 times, ma. Assuming 50 lakhs is the duty saved, okay. Namrata, hope you're able to see my screen. Duty saved. My duty saved is 50 lakhs. This is my basic customs duty. So if my basic customs duty plus social welfare surcharge all put together comes to 50 lakhs. Into 6 will be 300 lakhs. Multiplier of 6. 6 times is what I'm saying. That's all they're asking me. Right? Arshit says, sir, in DGFT, chartered engineer also comes into picture. Very, very promising career, ma. Uh, like any engineer who happen to be a chartered accountant, if you are a chartered engineer, also chartered accountant, you have a fantastic career. You can do a self-certification for technicality. You can also do self-certification for exports. So dual role, chartered engineer come chartered accountant. DGFT, it's a gold mine practice. It's a gold mine practice. Now, the last ancillary topic for today's discussion is your EOU, EHTP, STP, BTP. Now, these are the general schemes other than your SEZ, other than your DTA. So government, GST actually has given a step back for this EOU, EHTP, etc. Prior to GST, central excise, this was one of the prominent industry. But after barring customs duty, there are no big advantages. EOU, EHTP, STP, BTP, because of your requirements. Manufacturing industry, software industry, biotechnology industry. These three industries are permitted to get into this scheme, where my entire production, barring some 5% to 10% to the domestic tariff area, I manufacture and export. Then I'm permitted to get into these schemes. So what is the advantage of getting into these schemes? I enjoy the benefit of customs duty exemption and relevant additional levy when the goods are imported into India, where I'm operating as a EOU, ESTP, STP, BTP. What happens to the IGST and cess? All IGST and cess shall be levied and it will be claimed as an input tax credit. So I repeat, when the goods are procured under GST era from a DTA, IGST and cess will be applicable to these unit holders. Only imports, there is a relaxation. Domestic procurement, there is applicability of duty. So either the service provider or the supplier can claim a refund if the goods are given to EOU, who is holding advance authorization, or EPCG. And these are the people where they are permitted to hold this foreign currency in an EEFC account. Why? They import goods, they export goods. Instead of converting into your regular account, they get the money in foreign currency, hold in EEFC account, later put it back to the normal account. And the benefit of this scheme, this particular scheme is they say, when I do your net foreign exchange, value of imports compared with value of exports, like value of exports minus value of imports, I should have a net foreign earnings, which is having a positive position. And this is computed on a 5 years basis. Assuming I have imported 100 lakhs worth imports, I exported goods worth 125 lakhs. The gap there is 25 lakhs. My positive NFE should be there across all 5 years. So when you take average of 5 years, I should have a positive NFE. Then you are permitted to be under EOU. So what if I am not meeting that? Then you are out of your EOU scheme. That means all your purchases, you have to pay customs duty and procure the items. And there's a investment criteria. They say that any unit which want to operate as a EOU, EHTP, etc., minimum investment of 1 crore may be required. And based on the board permission, there may be a relaxation for some of these entities. Exit from this scheme. You can come into the scheme with some prior approvals. Now, getting into the scheme, EOU, STP, BTP is not that easy because you're enjoying customs duty benefit. There is a bonded premises. Like to give an example, a software company which is planning to get into this particular scheme, they will file an application with STPI. Software company will file an application with STPI. So STPI is an authority who sanction a particular license to this particular software company, where the designated address will be called as bonded warehouse. On any goods which needs to come, any goods which needs to go, any goods which are imported, all this will be with the prior approval of STPI. Also, all your agreements and pricing and relevant HSN code have to be intimated to STPI. It's like STPI is a big brother. All your activities should be a prior approval. You want to get into a new agreement, you have to take STPI approval. You want to raise a fresh invoice, invoice for a new service, get an agreement. This agreement should be ratified and approved by STPI. Then start billing. Money received in foreign currency, intimate to STPI. Money not received in currency, intimate to STPI. Fixed assets being sold, intimate to STPI. So it's all like a big brother watching you for enjoying this particular benefit. Deemed exports. Deemed exports in foreign trade policy, deemed exports under IGST. It refers to transactions which goods supplied to do not leave country and payment for such supplies is received in INR or free foreign exchange. Supply of goods as specified in foreign trade policy should be regarded as deemed exports, provided goods are manufactured in India. So for the purpose of foreign trade policy, EOU, STP, BTP shall be called as deemed exports. In GST, section 147 says that recommendations of the council, those supplies recommended are called as deemed exports. So what are the deemed exports under GST? Exports against advance authorization, exports against EPCG, exports to EU. These are recognized as your deemed exports. This is a thin line of difference between FTP and GST. Benefits of deemed exports, advance authorization, DFIA, etc. There is a duty drawback which is fixed, which is called all industry rate, brand rate. This is again based on HSN. This is not there in your syllabus. We can skip this particular aspect. That's all. So with this, we come to the end of foreign trade policy. Before I summarize, quickly, let me see if any dots are there. Okay. At the request of students, I'm just sharing my email ID. This is just for your academical interest, ma. I'm not doing any marketing, only for your academical interest. Harshit and other students are asking, I'm just sharing my email. My email ID, Praveen, PRAVEEN, @Gella, GELLA.in. Praveen @Gella.in. This is my email ID. So Harshit and Balaji and others, any doubt you have academically, any chapter, any problem where you feel that, so this particular problem I'm not in the position to understand, what could be the context behind this? I'm going to help you out. And before we wind up, couple of inputs from your examination point of view. Exams are to test your conceptual knowledge. Exams are to test your application of knowledge. So my recommendation is, when you read your institute material, there are, end of every chapter, you see this, let us recapitulate. These flowcharts, what you can see, I would recommend, just brush through these flowcharts compulsory before your examination. Point number one. Every chapter, income tax, indirect tax, costing, etc. Every chapter, run through this your topic called recapitulate your syllabus. Let us recap. Very, very important. Point number one. Point number two. End of your chapter, we have this test your knowledge. End of chapter, we have test your knowledge. Please practice the problems which are there in this particular institute material. Reason? This is open secret. Problems which are tested in your examination are within the four walls of this particular examination. Means I'm not saying that this will be lifted as it is. The pattern which would be tested in your examination is something which is from this test your knowledge. So here, what is the best book? What is the best material which you want to refer for examination? Institute material is the best source. Sir, I have done this. What else you want me to do? Come to your Board of Studies website, BOS portal, where MCQs are there, your preparatory examination question papers are there. Most of you are not aware that institute website is a repository of many data which is being extracted by the private agencies for your mock test and revisionary test point of view. Any private institute you go, institute material is a source for your exam, for your RTP and your MCQs. So your ICAI website, Board of Studies portal is something I would recommend. Go to that website, download previous year question papers along with answers. Third one, preparatory exam. Institute is conducting preparatory exam prior to your examination. Please attend those exams where you will get, hands-on experience how your main exam is going to be. And the last resource, where you have this topic called amendments. A repository of recent amendments. Our Board of Studies portal have compiled, they have come with a flyer where all your amendments for May 2024, like example, till 30th November 2023, any amendments are applicable for May 2024 attempt. So here, you need not search any Google or any institute, any other private source. Board of Studies has compiled, which is called compendium of recent amendments applicable for May 2024. If you read this particular compendium, at least 10 marks will be fetched from this particular amendments. Could be a theory, could be a MCQ, could be a problem. Now, generally, this amendments, income tax, indirect tax is a source where the examination questions are tested for sure. So I have given you MCQ, I have given you your problem, I have given you your recent amendments, and also your RTP. Now, if you are thorough with these aspects, I would say there's no way you can fail your examination. You can never fail your examination. This requires CA Institute, CA examination requires an element of hard work, 99%, requires an element of luck, 1%. 99% your hard work, sheerly your hard work. 1% luck, what you have prepared should have been tested in your examination. That's why I'm saying 1% luck, right? So with all this inputs from my end, I end today's topic for our indirect taxation paper 5 with foreign trade policy provisions. With wholehearted, I wish you all the best for your future examination. Do well in your examination. Come with flying colors. I would like to see all of you as a future chartered accountant. And if time permits, please share your results and feedback once you have qualified. I'll be happy to see that. Some of whom I have taught you have qualified chartered accountancy and have come into this profession. With this, I end my today's presentation. See you all. Good night. Goodbye.